Computer. All right, I'm recording, bro.
Me too.
All right.
Okay, welcome guys. Thank you for attending day 2 of the bootcamp. I don't know why exactly we call it a bootcamp because there's no fitness involved, but I think it's the idea that we are intensely doing something with intensity and with precision and with high expectancy to get something great out of it. And so, yeah, we are recording the session and it will be uploaded on the website in a DW course. So don't worry about recording it. You don't need to do that, and it will be recorded. For those wondering, yeah. So today we're gonna discuss the entries, patterns, and just putting it all together. We're gonna speak a bit about ranges within the different time frames, and we will be speaking a bit more about TradingView itself and some tips and tricks. And yeah, if we don't have enough time, we'll do a separate video on setting up TradingView. But yeah, let's get into it. So first of all, manipulation or no manipulation. So we will be discussing when do we look for manipulation and when should we not look for that specific manipulation to happen. And it can be confusing, especially when you first go through the course. You see all these nice examples of trades where there's clear manipulation and clear price moving in the opposite direction and then just skyrocketing into the other direction. And then after, when you try to trade it, you see, but it's not as easy to identify, or you take a setup and it's actually just a trend continuation. So there's a few things that we can look at in order for us to identify whether it's good to look for that manipulation or not. So just, yeah, it can be overwhelming and scary to trade the manipulation. And in the beginning, you can either not spot the manipulation or you think everything is manipulation. Every impulse or every pullback looks like a manipulation, which is not always the case. So the key to manipulation trading is having patience and timing. I can't stress that enough. You won't always get manipulation every day, but you more often than not will get the manipulation in the beginning of the session or that session opening. And when we do not push in the opposite direction at a certain time, what can we then look for? So if we're not seeing that opposite direction push into an OB, a strike zone, what then can we look for? How can we then frame a setup? So here is the list of things we want to see in order to take an early manipulation trade. So basically London Open or New York Open. So first, a consolidated Asian range, where Asian range is consolidating. It's important that the Asian session is 20 to 30 pips in range. So it's rather a tight range. If it's more than 30 pips, you would tend not to look at it for a manipulation out of that box and then a continuation. We would not look at that profile. So it must be visually consolidating in a tight range, not training in any sense, in any case. So we will look at the Asian highs and lows and potentially look for those areas to be taken out, because above and below those areas, there's liquidity. So we would be looking for that liquidity grab. Do we have an order block above or below the Asian range? That's important because that is our strike zone. That is where we would be then framing our trades from. So we want to see price starting to rally from Frankfurt Open. So at around Frankfurt Open, in and around that area, we want to see price start to rally in the opposite direction of where we anticipate price to go for the day. Now, let's say we have the Asian session and it's trending. So when the trending, we have a trending Asian range. So in this case, the Asian session will be more than 30 pips. And it's obvious it's visually trending. We can see it's visually trending. It's not making just equal highs and equal lows all along. It's visually trending. And is price breaking towards structure? Meaning, is price breaking highs, lows on within that range of the Asian session? And then we'll be looking for the test of the most recent and clear order block around Frankfurt Open to London Open. And I think so you'll agree that this week we've seen more of this type of setups, especially the past 2 weeks, where we see the clear pullback towards an order block, and then the continuation throughout the day, for the day's expansion, the day's price action. And that is when we more often than not have that clear visually trending, but consolidating, but we see prices visually trending. Are there any questions regarding this? Do you understand when it's consolidated and when it's trending? Any questions? Do you all get it, understand more or less? We'll jump into more detail later on with examples, but just the backbone theory behind it. Great. So yes, clear.
Okay. Yeah, Paul says it's good. Clear.
Good. Let's jump to the next one. I see this image is not loading. But anyway, so in the beginning, in the DW course, we focus on a set time. So we focus on just London Open, and then we focus on a few different patterns. The value from the main beginning DW strategy is that once you know what to look for, exactly what you look for, it's easy to know when there is no trade, because you know what you want. You want that clear consolidation. If it's not there, it's easy to say, okay, there's no trade set up, and I stay away. I do not look at the charts. So this setup will not occur every day. So try not to force the trades. So but in this next level, we expand our perspective and we approach the market more from a bird's eye type of view. So in the first module, we looked at these three basic setups, the A, B, and C. I'm sorry for the C not loading, or it's just on my screen. But the first one, we have just a normal high-low created. The second one was where we broke the previous low, grabbed the liquidity, and then went in a direction. And the last one is where we had the equal highs or equal lows created as price pushed down into that area. So by applying these new concepts learned in the first day, you acquired an in-depth perspective on how the market moves. We no longer just look for a 50-minute Asian consolidation, manipulation, initiation, and then a continuation, but we apply these new concepts to get a pinpoint accuracy and sniper entries without the need for the original structure as mentioned above and shown in the images. We now have the backing of the higher time frame to take the highest probable trade. So basically, we had that three patterns that we discussed in the framework section of the original DW course. But now we diving deeper into it, we expanding on it, and we dissecting it more, and we use the higher time frames, points of interest and areas and strike zones and places to get better precision and better accuracy on our trades. So the first one, it looks familiar, type 1. So this one is the most simple entry models, and it's much the same as we had in the original DW course. So this setup is identified by a few key elements, and I've discussed this before in a lot of the chats, and I have spoken about this, and we've set up a checklist as well. But basically, we want to see the structure break, price breaking structure on the lower time frames. So this is specifically 15-minute and 5 minutes. We want to see that structure break. We want to see that empty space left behind, which is our imbalance, the liquidity being generated, and then a pullback towards that order block. And this pattern is generally seen as a trend continuation pattern, and is therefore ideal when price is in a trending environment. So keep that in mind. When we see price is clearly trending, 1 hour, 4 hour, clearly trending, this pattern is ideal, because more often than not, this pullback will either create an equal high or equal low on the 1 hour, or it will create that wick to the upside and the flush towards the downside, or it will just create a clear lower high or higher low on the higher time frames. Now, as I said before, you can clearly see this pattern on the 15-minute or 5 minutes, and you would need to have mostly would need an aggressive entry, as price does not always give another chance. But there's the exception. When price reaches that level on the 15-minute or 5 minute, you can find confirmation on the 1 minute. So don't go now and jump into every 1 minute trade, but looking at the 15-minute, 5 minute, if this is your 5 minute price action or 15-minute, on the 1 minute, you can possibly see the structure shift, something like this, where we have a push, pullback, a push, breaking that structure, and then a return to an order block created. That is then can be seen as a confirmation entry, and that will then be your confirmation. Whereas you can mostly enter as a risk entry on these type of entries. And we had a setup like this on GU this week. We'll go into that a bit later. So that is type 1. Then type 2, this is Ilya's favorite. He is the more patient trader. He has a lot of patience, I think more patient than all of us combined. So this is the setup that you want to see the most of. And it's the one that you have to wait the longest for, because this setup will mostly evolve and come to fruition once price reaches a higher time frame order block strike zone. So this is one of our favorite entry patterns because it is so mechanical and easy to identify. Once you grasp exactly these steps and how price moves and how price is delivered and how price is engineered to move, this is so easy to identify. You will start to see this happening everywhere. Once you've really put on the glasses and the vision of looking at price action through these lenses, everything becomes so clear. And this comes with practice and chart time. We have a few members that they're backtesting so much and so often, and they will get this sooner. So just to encourage you, backtest, practice, spend time on the chart, and look for all of these things that we've spoken about in day 1, the first session, and what we'll be discussing today. And I'll also share, perhaps in the last session, we'll perhaps share how to effectively backtest the system, because it can be confusing and you're not sure how to backtest it. So we'll be sharing some backtesting methods on how to backtest this. Okay, but enough of that. So as soon as you see the equal highs and equal lows at a strike zone, higher time frame order block, then we always wait to see if there will be a liquidity grab. So this is an attempt to grab the last bit of liquidity before going in the new direction. So just to sum up what we're looking for, first of all, we want to see equal highs and equal lows created. So that is very important. One of the most important things to see is that equal highs and equal lows. So when price is pushing up and we see that equal highs created, that is an ideal situation for us to expect price to first manipulate, level liquidity grab, and then to go into our direction. So we want to see that equal highs or equal lows being created. So then we look for the liquidity grab. The liquidity grab is a push that grabs the liquidity above or below this area where liquidity resides. So you should all by now know where liquidity is, as we've discussed it many times, and it's in the course as well. Whenever you see price creating equal highs, do not enter yet. Even if it's on a 1 hour order block or a 15-minute order block or a 5-minute order block, wait for price to first take out the liquidity above or below it and then go in your direction for the structure break. So after we have the liquidity being generated and then the liquidity grab pushing up, then we look for that structure break, for price to convince us that it has intent to go in the opposite direction. We've tapped a higher time frame order block. This might be the 4-hour order block, or it can be the 1-hour order block. So as price taps into it, this is now what we look for as what we call a slowdown or a shift in structure. This is now where we look for our entries. This can be on lower time frames, such as the 50-minute, 5-minute, 3-minute, and 1-minute. So this all depends on what makes sense. And I can tell you what makes sense for me because I have experience in this, and you will need to have that same level of experience to see, okay, this makes sense, this does not make sense. This 50-minute order block makes so much more sense than a 5-minute one. It's much clearer. I'll take my trade on the 50-minute. I will get more into that once we get to the charts. So we want that structure break, push towards the downside, breaking the structure of the whatever we have below and all the high lows that were created. We break that structure. Then we want to see price return towards the original order block of that move towards the downside. We want to see that push towards the downside and then a return to that order block. Price can return in various ways. It can ideally push up, return to that order block, or price can push up and we can see another equal highs created. That's ideal because then we have liquidity again being generated, and then price taking out that liquidity into this order block and then reverse. You see how we are stacking the confluences and creating the story. We're telling a story of what price is doing. And that is how we're doing it. Then price returns to this first order block. That is our entry 1. So just to backtrack a bit, as price reaches the higher time frame order block, and you have the precision, you have the guts, you have the aggressiveness, risk appetite, that can be your first risk entry, stop loss above. So that is where you have your risk entry. What I've done many times and on AU this week as well, is I looked to the left and I identified a 5-minute order block, and I took that structure as my order block and based my entry off of that entry, stop loss, take profit. So you can do that as well. I would be highly advised to first wait for price to break structure and then return to the original order block, which creates our first entry, entry number 1. We'll just refer to entry 1. So in the chats, in the analysis, and wherever, we'll refer to this as entry 1. Now, if you are more conservative and you want more conviction, you want to see price really showing intent that it's going in your direction that you want to take the trade in, then we wait for another break of structure and then a pullback towards the original order block of this move towards the downside. And that is then we would want to put our entry number 2. So then we have our entry at the bottom of the order block and then stop loss above. Once at entry 1, would you look for TDI as well? So with regards to the TDI, after this move has happened, then more often than not, the pullback towards entry 1, the TDI will already be completed. So if this is your TDI, we might already have that peak created at this point, and that is another added confluence that we can look at. Yes, so Bastian, in this example, he's asking about the time frame. This can be the 50-minute or the 5-minute, but we'll explain more of that when we look at the examples. Yes, it can even be on the 1 minute. So I'll show that in the examples as well. But with regards to 50 minutes, I do not look for a peak on the lower than the 5 minutes. So this is 50 minutes or 5 minutes. This can be considered as a reversal and a counter trend trade. This is not necessarily a trend continuation trade. It can be a trend continuation trade, depending on the current market conditions that we are in. And once we get to the examples, I think you will understand a bit clearer, a bit easier. So I'll get to the questions now again. Let's just continue for now. So then the second entry is then after another structure break towards the downside. TDI, it is in the course, Johnny, in the DW course. So once you go through the DW course completely, you'll see about the TDI and the explanation thereof. So let's just continue on to the next slide. So now we are just looking at just a basic sketch of structure, and just how we look at it and how we anticipate it is that we want to see when we see a push towards the right. Sorry, I'm now jumping ahead of myself. So once we have price coming towards the downside and a pullback and a structure break, so we understand that's a structure break. We see a clear order block created here. We've refined it, we've made it clear. Then we can look for a pullback towards that area, and we can have our entry, stop loss above, entry there, and I'll take profit down below. So now when we see this structure being broken again, price pulling back, and it creates another order block, we enter again at this order block. That's entry number 2. This will be aggressive. This will be entry number 2, and we take it down. So this is just an example to show you how we look at order flow, how price is generated and how price is then moving in a direction. Why is that entry aggressive? Mostly because this will often be the first tap. So let's say price is moving like this, and now we have price coming down, creating maybe a liquidity grab, pushing towards the upside, pulling back. Price can easily if we just clear it out, price can easily be doing this and then just make a liquidity grab on this high, liquidity grab, and then continue trading towards the downside. So then this entry would have just been stopped out, retested, and then continue towards the downside. So that is why this is then the more confluences you can have, the more structure break. It's evidence of price moving in your direction. So it's setting up the trend. Retail traders will see, okay, we have a trend line. This will be the third touch of the trend line, and they will take the trade there as well. So just another way how confluences are stacked onto each other. But in the examples, you'll see now why I classify this as a semi-aggressive entry. Let's just continue on with the next one. Here we just have another example of how the market can set up price. So when we see price is coming towards the downside, towards a higher time frame order block, price taps the higher time frame order block. Now you can either enter with your entry over there, stop loss below, and you take the trade towards the upsides. You have your risk entry and price pushes towards the upsides. That's good, you can do that, that's fine. But what we would like to see is price coming down to this order block first, and then give us more confirmation, tell the story, price slowing down, and then take the entry. So in this example, as price trends towards the downside, first of all, we're creating liquidity towards the upside. So we have trend line liquidity, and we are creating new structure to be broken. So we're creating, so price is slowing down. As price taps this area, that will then be our aggressive entry, like this. When we see price pushing up, we're breaking structure, pulling back towards that original order block. That is then our entry number one. If price pushes back up again, pulls back down, that is on entry number two. So just note that you will not always get the second entry, and sometimes you will get it every day of the week. We can't predict how it will play out and what will happen exactly, but we can anticipate and see how price moves. So if we're seeing price creating this type of structure, it's coming back and it's not just exploding towards the upsides, then we might see, okay, we have another chance to enter this trade. So if you miss this first entry, don't fear, don't go, oh, I missed the trade, anything. In price pushes up, don't go into here and just enter there, because if you have FOMO and you're afraid you're going to miss the train, wait to see if price comes back towards this order block, this original order block of this move. If it comes back to this area, then you could potentially have another entry. Also take note of how price comes back, because if price comes back like this and we're creating this equal high set of equal lows, that tells you there's more liquidity. We might have some imbalance here as well, some empty space. Then there's a high chance that price can potentially come back again into this area and then tap away. And then you might see on the 1 minute price breaking this structure, coming back again to an order block, and then push all the way up. So there's different scenarios that you can look at as soon as price reaches a higher time frame order block. But the main idea is, the main concept that you need to take away from this is when price reaches a higher time frame order block, we don't just enter there. We first wait to see how price reacts around that area. When we see the push in, how do we react from it? Do we see structure breaks? Do we see equal lows? If we have that equal lows being generated, there's a high chance that price can first come back down, take out the liquidity there, and then move in our direction. We can have a structure break again. You might left behind an order block here. Price can come back down, retest that order block, and then push. So the idea is that you should learn to look and analyze the markets in a way like this. And in the last day, I'll show you how to backtest this and how to practice this in order to practice this mindset and in order to visually exercise it. Ilya, do you have anything to add? Or
Yeah, I actually had something to add maybe on the previous slides as well, but I already kind of slipped out of my mind. But the most important thing I want to mention to you all We try to make it as simple as possible, because there is no meaning to introduce like 5 types of setups, like with all the little details, because you're gonna get confused. But right now you just have 2 types. So type 1 is for continuation, mainly possibly when the Asian session is trending, right? So you're gonna have that fast tap into an OB. Let's just see. Yep. So yeah, possibly this a little. Let me grab the annotation too. So possibly this right here could be as well your Asian session, right? But the market is overall trending. So when you have such a condition, you can expect a quick tap into OB, and even right there, you can get this setup. So this kind of pattern that we have right there in red, you just have to memorize this, because this happens on all time frames, right? So if you just understand this and if you just memorize this pattern, then you can just trade like on every time frame that you want, because this is going to happen on the 1, on the 3, on the 5, on the 15, on the hourly, and even on the monthly it's going to happen, right? So it's all about identifying a strong order block that has imbalance potentially on any time frame, and then just waiting for this setup to develop. And again, as the vet said, you have to understand all the concepts from day one: liquidity, equal highs, equal lows, how to draw correct OBs, and imbalance as well, which is pretty important. So yeah, again, type 1 is mainly for continuation. And then if you go to type 2, this is like more when the market is tapping into a 4-hourly OB or an hourly, because we joked about this as well. I love this GIF. The guy that it's turning his cart like very slowly. This is what's gonna happen. It's not just gonna tap and go, unlike setup type 1. But here you have to patiently wait for the market to accumulate. Maybe you're gonna have an. Sometimes what I really love seeing is having this consolidation as an Asian session. All right. So if the Asian session creates the consolidation, this is your London Open into the hard time from OB. So you don't rush to take a trade. You can, but you don't rush. And then you really want to see the intention of the price. You really want to see the market flush and break structure on the left. And then, as always, you have a newly created OB, because this big buy for the banks to manipulate price, right now they're in drawdown, so they have to return back to take out their position at break even and to launch more orders. And then on the way up, it's always good to have some sort of liquidity as well. And then we tap and then we go. So this setup, as the vet already mentioned, requires more time. And type 1 requires a little bit more aggression. But the pattern is all the same. So
just something that Stefan asked: when do you go break even when you've entered down here? So we found it as well. If you enter here, you cannot just go break even at the first structure, because with this understanding, we now know that price can return to your entry, maybe even like have a wick there, tap into it, and then your break even is there, and it just taps your break even, and then it goes as indicated. So this will also be, I think we spoke about it in session 3. We'll give more detailed breakdown of how to manage the trades, when to take profits, when to set to break even. But for me personally, I would most likely go to break even once I have the second break of structure. Set my risk, accept the risk, because that's when you take a trade, you accept the risk, you know what you've done, and then except if you know it's super crazy market conditions and you want to just secure, and if it breaks even, it's fine. So there's a lot up to you as well for that, but not always to just go break even as soon as we have the first structure break, because we can have that multiple pullbacks into that area, into the order blocks before going in a direction.
And it kind of makes sense, because again, if you understand the order flow, how the market jumps from one OB to another, and if you enter at the first, but then right there, as the vet said, so let's say you actually enter right there on this entry, but immediately after you enter, another OB is created right here. So you actually expect the price to go there. So even if it breaks structure, then you should be careful with setting to break even, because you potentially expect the market to come to grab again liquidity and maybe then to move again. So keep that in mind. If you find that after you enter and you rush to go break even, but there is a new OB created right there, then what you can also do is just take little partials to cover for your risk. Let's say if you risk 1%, then you can just take a partial that covers that 1% risk. And then you can just leave your stop loss as it is. This is something that you can do as well.
Great, yes.
Does an entry 2 make an OB as well? Yeah, it does. Yes. Entry 2 can make an OB, yes, but usually the market will not like constantly return to those OBs. Entry 1 will happen most of the times. Entry 2 will happen like, yeah, it might not happen every single time. This is what Devet already mentioned as well. So your entry 1 is the best. For me, entry 1 is the best
Yes.
setup to enter, yes.
Okay, so now just a quick checklist. Just taking into account of what you've learned in day 1 and just applying some more checklist things from this session. So this is something you can take, expand on it. So you can, if we have some artists, visual artists, you can make a nice infographic of it. But yeah, take it, use it, don't use it, it's up to you. So we look at our daily ranges and we look, are we in a premium or a discount? So if you don't know what premium or discount is, go and have a look at the first session again, go through it and make sure you understand it. What's premium and what is discount? Then we break it down to the 4-hour range. Are we in a premium or discount on the 4-hour? And I'm going to expand more on this now when we get to the charts. Then we look, have we reached the higher time frame order block, a 1-hour or 4-hour? Then we'll do our lower time frame analysis. Do we have a structure break? Do we have equal highs or lows? Do we have a liquidity grab? Do we have imbalance, open space left? Are we returning to an order block? And do we have an entry 1 or an entry 2? So those are just a few things that you can, well, the main things that we look at. Those are the main things that I look at when I do my analysis. And if you watch the daily analysis, I often go into more depth on one of these things as the inspiration grabs me to speak more about it. So it's very important to watch those morning analysis as well, because I talk about daily ranges, 4-hour ranges, higher time frame order blocks, and we talk about the structure break, equal highs, liquidity grabs, imbalance, order blocks, and our entries. So this is just a list that you can print out in the PDF that will be provided and look at it. Then I made this little roadmap for you. For those, I know a lot of people have been asking for it, but I'll just quickly run through it. This is not just in the presentation, but the PDF will be uploaded in the course as well for you to download and print and put it against your wall, or make a placemat out of it, or make a poster, just where you like, whatever you want. So first of all, we start and we look at the daily direction, marking out the swing highs and the swing lows. We divide it into discount and premium. Just to touch on the previous slide, where are we currently, in discount or premium? We look at our daily zones and we mark out the previous day high and low. I could ask this question, why do we do that? But I'm just giving the answer. I do it because I want to see, well, first of all, previous days high and low, just the way we look at Asian high and low, we look for liquidity above those areas. So previous daily high and low, if we look for reversal, we can potentially grab the liquidity above the previous day's high or low and then reverse in the opposite direction. So I'm just mindful of where is the previous day's high and low. Then on the 4-hour direction. So on the 4-hour, we look for strong 4-hour order blocks. How do we know it's a strong order block? Well, is it a strong move breaking structure that creates that order block? So pay it, look, there's the error. Look for those, pay attention and look for those equal highs and equal lows and imbalance on the 4-hour as well. Very important. Does the 4-hour order block leave behind empty space, which is our imbalance? And then can price come back to fill that area? So that's very important to look for that areas. Then the 1-hour direction, very important as well, because we are intraday trading. If you remember on the slide of the time frames that Ilya provided in the first session, this is also important for us to pay attention to the 1-hour direction and the 1-hour order blocks. So this is something that you need to pay attention to now. Listen well, because it can be confusing, especially in the beginning. Okay, so we refine our order blocks and we look for our 1 hour order blocks within the 4 hour order blocks. So is the 1 hour direction the same as the 4 hour? Meaning if we are bullish on the 4 hour, is the 1 hour bullish as well? If the 1 hour is not bullish but bearish, then we can possibly be in a pullback from the 4 hour point of view. So the 4 hour is making an impulse, and then on the 1 hour, we're making the correction, making the pullback. So we can, in essence, take that pullback as a counter trend trade towards the 4 hour order block where the impulse originated from. And I'll draw that out again on the chart. So determine whether the 1 hour is creating an opposite trend to the 4 hour while traveling towards the 4 hour level, the 4 hour strike zone order block. If so, you can take a counter trend trade. And just note also the empty space on the 1 hour. Next, 15-minute refinement. We mark out our 15-minute order block, so it's even further refining. We mark out the Asian session high and low. Are we in a tight range, 20 to 30 pips? We look for the manipulation in the opposite direction into an order block. We look for the imbalance, equal highs, equal lows around the entry order block. And if we are trending in the Asian session, look for that pullback around Frankfurt Open into a 15-minute order block. So I've just encapsulated and taken everything that we've spoken about before and just put it in a nice package, and we have it there in a few bullet points. So you have gone through everything now. So when you look at this, you'll know what to look for, and you know what the examples are. Now, on the 5 minute to 1 minute, that's now where we look for our entry. Is price at or in the higher time frame area for the trade? Yes or no? Price should be slowing down. Remember the bus GIF and the boat in the harbor turning around. We look for that slowdown on the lower time frame, and we know price is slowing down by implementing the things that we've just learned with regards to entry pattern number 2. We look for a change in structure and introducing that new direction. We look for an entry pattern. Price needs to break the structure, body closes above and below the wick. So I see a structure break when we have a body close. The body closes above or below the wick. And I'll take profit. So we are still working on this, but as a preliminary concept, I'll take profit at the Asian high and low. First take profit, secure, partials, take profit, 80% off the table, 50%, and then the remaining at the higher time frame order block for the remainder of the trade. This can be, just imagine this now. We are at the 4 hour order block and we want to take profit at the 4 hour order block as well. But we've entered on a 5 minute or a 1 minute order block. We can still take profit at the 4 hour order block. It may take a day or 2 or 3, but just imagine your risk to reward ratio when you have the risk of 3 pips for a 1 minute order block, but you have the range of a 4 hour range that might be 20, 30, 40, 50, 60 pips. Imagine that risk to reward that you can get by doing that. So we're basically implementing higher time frame direction, higher time frame areas, strike zones, and we are looking for the pinpoint accuracy on the lower time frames. Now we'll jump to the charts and we'll look a bit more. We're first going to go over trading ranges, and then we will be looking at some of the trades, the trade setups, examples, and then we'll be looking at trading view tips and tricks. But we might do that in a separate video depending on the time. Let's just jump to, okay, we will start now with a trade example and just look at the ranges. So we're going to start on the 4 hour. So in the 4 hour, we can see price, and we can see that price is, so this is now a good example of a trade taken. So I'm just gonna go back. Okay, so first of all, I am identifying that this is a swing low and that is the swing high. So we have price here, the low, and there is our high. So this is an impulse That is the big move towards the upside. Then I place this tool. You can use the fib, or I use this GAN box. I mark the high, the low, and the high. So it's just basically just dividing this move into equal sections, and we know that everything below the 0.5 is discount, and everything above is premium. So if I can just explain discount and premium, just go over it again. Everything below this line is cheaper, less expensive than everything above this line. So if we take this line and we just make it nice and clear, we can see looking exactly at the values. We see the values are lower, lower, lower. 77,300, 77,250, 77,200, 77,140. Those are all lower values compared to the ones above the 50. We have 7755, 7600, 650, 700, 750. So if you want to make a profit, you buy something at the discounted price, and then you sell it, you put a markup on it, and you sell it at a higher price. In business, when you have your lemonade stand, you buy your things at a cheaper price, your lemons, you make your lemonade, and you put a markup on it, and you sell it at a more expensive price, and you make a profit. So we have exactly the same concept, exactly the same principles in trading. So we can now identify that in this point low and this point high, where will price be the cheapest? Well, we can see below in this green area, below the 0.50. Now I can see that in this area, we have a 4-hour order block. So there's our 4-hour order block. So I know that this is our 4-hour order block. So we can potentially see price coming back down into this area. We can have the slowdown and then a continuation into the premium, into the more expensive price range. Now we know that, so we know it is in a discount, so it's good. So just to unclutter the chart, I'm taking that away. Then jumping to the 1 hour. What can we see now? Everything that we've spoken about before, we can apply it now as well. Now we also have, we can say, okay, we have, what is this? We have equal lows. So we have liquidity generated. We have empty space here as well. So we have imbalance here as well. So you're seeing how I'm starting to paint the picture. Just one more thing. We have a structure break on the 4 hour. You can see that we have clear structure break towards the upside. Structure break top. So we have that structure break towards the upside and strong body closes above those wicks. Very nice. We have even on the 4 hour, it's even clearer. The equal lows, very clear empty space in this area. So we have imbalance in this area to fill. On the 1 hour again, we can just see that we have price pushing up, coming back down. So now this is where the patient comes in, and this is now where you need to pay attention and be patient to wait for the setup to occur. Just a side note, Aussie dollar is better in New York session, not London session. In London session, it tends to be slower. New York session, it's much better, probably because it's the US dollar. We don't have the pound or the euro in the symbol, in the instrument. So now we wait. Now we can wait. We don't even have to be on the 15-minute. We only want to see price coming back down in this area. We can refine. We have our 1 hour order block here as well. So there is our 1 hour order block. So now we want to see when price taps into this area. How do we behave in this area? What is the reaction in this area before we continue up towards the upside? So we wait. We see price come down. We've tapped this order block. So now you can say, okay, but I can enter on this order block. Well, you probably can. You can have your entry there. Your stop loss should be below the order block. And then you take profit, let's say the highs. Let's say that is your trade. So you have a 12 pip stop loss, 42 pips target, a 3.3 risk to reward. So you can do that. There's nothing wrong with it, okay? So let's just hide this one. Now we drop to the lower time frames. Now we need to see how price reacts in these areas. First thing first, this can be seen as our London manipulation because it's at London Open. So we can just note that this is London Open. So potentially we can potentially see a reversal is imminent. We can potentially see a reversal coming up towards the upside. So now we're busy drawing this picture of what price is doing. We're going lower, and we see that reaction. So let's jump to the 5 minutes. We see price is taking out these equal lows. We see price is filling this imbalance, and it's all wonderful news to us. We see price coming down, and there we have our first price breaking towards the upside, and we have now our first structure break. So this is how we now start to map it out and see what price is doing. We have this 15-minute, 5-minute order block, and we have a structure break, so price can come back to this area. But here's the thing, we have not yet entered the 1-minute order block, and New York session has not yet opened, and we are in a dead zone. Remember the chart that Eli gave us for the time zones? We are in that dead zone now, so it's not yet time to look for a trade actually. So price comes down, we play it out, price reaches this area. We could have taken a trade there. I think we did take a trade there, and then target the highs. We'll look at targets right now. And now we can look for that trade because we have the structure break. There this is our entry 1 now. We didn't take the aggressive entry as price tapped the 4-hour order block. This is our entry 1 now. Price pushes back, pushes up. We see some conviction, doesn't break it, but what does it do? Creates another set of equal highs. So now we are building our case even better. We have now these equal highs above this area as well, indicating we have liquidity above this area, so giving us more confidence that price can tap into this area. What else do we have? We have this trend line liquidity as well. Price is stepping towards the upside, creating that trend line liquidity as well. When did this move happen? Exactly at New York Open. So if we see if we expect manipulation at the session opening, that is then the best example that we can have. Price pushing at the opening of a session into an opposite direction. So now we wait and see. There we tap into the 1-hour order block. Now I go to the 1 minute. You can go to the 3 minutes as well, but for this worked out on the 1 minute very clearly. And I'll show you now when we compare it. We now have to see how price is acting on the 1 minute. Even on the 1 minute, we created equal lows, and I'm just going to take this one right away now. We created equal lows, price grabbed the liquidity into an order block. Remember the example that we had? We had the high time frame order block, equal lows, equal highs, and price grabbing the liquidity into that area and then reversing. Where is our cleanest, nearest structural high? There is our structural high. So we need to break the structure first towards the upside, because this is our range that we are trading in now. So if this is our low, this is our high, we want to see that range broken, and then once we have that, we can again put on our premium and discount and see for price to return into the discounted area to this order block, and then trade the trade towards the upside. So we want to first see the new range created in our direction. We wait, then we have, see price being funny. There we have the structure break, and here we have the order block. So again, we have now this structure break. We have, it was this one or that one, not exactly sure, can't remember, but we have this order block that broke structure towards the upside, and that one. Let's see price going back down. Taps into this area. And then we see the explosion towards the upside. So your entry in this area, this is the 1 minute. You can't have a 1 pip stop loss. That's ridiculous. So we have it at least at, don't go below 2 pips stop loss. And then we'll now check for take profits as we go along. So we had the structure break towards the upside. If this is our big move towards the upside, we can have our area like this, and we know and can see that this order block is within the discounted area. So that's just by taking the higher time frame. So we now know we are in the 4-hour discount area, and we are even on the 1 minute discounted area. Even on the lower time frames, we are in that discounted area. I'll answer the question just now, and then going back to the higher time frames, we look for potential take profits. Where was our Asian session high? There's our Asian session high. So we take that as our take profit, and that is then how the trade played out. By looking at the previous example, where we had 3.38 risk reward, would have been tapped, I think. Not yet, wasn't tapped. And here, by just being patient and waiting for price to play out and giving us that story, that is then how we got this bigger risk reward by implementing entry type 2 and taking the trades from there. Let's just backtrack now and see on the lower time frame, on the 5 minutes, did we have anything that made sense? No, we can't see a clear order block. Nothing looks clear. On the 3 minutes, on the 3 minute, it could have worked. On the 3 minute, you could have had this. I would agree. There's a 3 minute order block. Entry as a tap because we had a break of structure. It's not as clear, but we did close above. You can see that we did close above it. And then your stop loss would have just been below it, a bit wider. Still, that would have made sense to me. Would have been tricky because we already tapped into it. So potentially you could have taken this swing point as your high, but it's not as clear because we did not break any structure or body closes. So this is the one that made the most sense. And then entry at the order block. So your risk to reward would have just been adjusted a bit to 8R instead of the 14R.
Sorry, David, can I ask you something?
Yes.
Could you move to 1 minute time frame again?
Yes.
I want to ask you about the entry point from the order block. Why did you not take this one? Oh, sorry, take this one after the. Actually, this is the order block, right?
Mm-hmm.
After breakout, and then the market created the order block around here. Is it? Why?
Okay.
Why you
Yes.
take the? Why you take this one? Why not this one?
Okay. First of all, I'm looking at where liquidity can be. So if you remember Ila's section about trend line liquidity, what do we have here? So it's very important for me to understand where is the liquidity being generated. So I can see this trend line. So I know there's liquidity below this trend line. This was the big move into this order block. That's the big move into this order block. So if you took this as a break, if you looked at wicks above wicks, if you look at structure break as a wick above a wick, so then you would have counted this as a break. If you look at wicks above wicks, so then this could have been a break for you. And then this would have been your entry 1. And then we want to see where entry 1 was, is usually then where we would look for entry 2. So there's entry 1. price coming back down to this area would then be entry 2. And just purely because this was trend line liquidity, and then if you looked at that and price came back down, you could have then seen that this was also a form of equal lows being created down there.
Okay.
And whenever we have the equal lows, I first want to see that push breaking the equal lows. I don't want to see any equal lows before I enter.
Oh, okay. Thank you. Clear.
Okay.
Darius,
Jack-
what's the question, bro?
Hey, so so with the structure break, so like where you have the structure at, does it, so you know where how the wick pierced but it didn't actually close?
Yes.
So when you have instances like that, do you just change the structure break that you're looking for to the wick that pierced through,
No,
and then you wait
no,
for
no.
the?
No, I stick to one structure break type. So I just want to see body closes. I would not have considered this an entry until I saw this structure break with the body close above.
Oh no, I'm saying, because so before the wick pierced through that, the structure previously more to the left.
This
Yeah,
one.
yeah, that was the more to left. Yeah, right there. That was the structure that you were looking to be broken, right?
Yes.
But then it didn't break it. So then do you
Yes.
move it to the wick at the top?
Yes, yes, exactly that. So it
Okay,
didn't
cool.
break it. So then I just move on and see, okay, this is the most recent structural high. And then look for that to be broken. It did break it. And then we saw the nice A, B, C, D coming back down, this type of movement coming back down into this order block. And that is then where we get our entry. Now, what is more important as well, or also important, is as we came back down, let's tell the story even further. We created equal highs. We created another order block over here. We pushed towards the upside. We broke the structure, Where do we come back to? To this order block. So if you missed this first one, you have another entry. I would take this week into consideration as well. There you have another entry if you missed this first one. We already now broke the structure. We came back down, tested this area, but maybe you missed this. Now we can see, okay, we have liquidity above this area. It's not below. We kind of have these equal lows, but this is now the third, fourth time that we created equal lows, and we're starting to move towards the upside. We can now take this order block into consideration. We move towards the upside. Again, we broke structure. So again, we're creating an order block, but you see we're moving further and further away from the order blocks. We did not chat this, but you can see that we broke the structure towards the upside. We came back down, not all the way, and then we see the massive explosion towards the upside. And that's how when price is starting to not come back all the way down to the order blocks, you know price is gonna explode towards the upside. And then that's exactly what happened. It was just a big impulse move towards the upside. You now see the slowdown is complete. The boat has turned around. The pickup truck has turned around. It's ready to go.
Yeah. All right. Appreciate it.
Awesome, man. Jack asked, so here's this example. If we don't see clear entry on 5 minutes, then this is when it's worth looking at the 3 or 1 minute time frame. Exactly that. When nothing is clear on the 5 minute, I drop down lower. Let's quickly go to who's playing rugby.
Sorry, please. I want to ask a question before you move forward, please.
Yes, you can ask a question.
Okay, yeah.
Can you maybe just turn down?
Can
you maybe just turn down the TV a bit in the background?
Okay. Yeah. Can you hear me now?
Yes, perfect.
Okay. It's getting a little bit confused because I am expecting you showing us the type 1 pattern and the type 2 pattern on the chart. You know, because for like me now, I will be in. I would like to focus on the pattern, which is the type 1 pattern and the type 2 pattern, but it's getting a little bit convincing now because what you are doing here, it is not really I don't really get the pattern here. I don't know, maybe if you understand what I'm trying to say.
Okay, so this is our pattern number 2, and it is characterized by price reaching a higher time frame order block and slowing down, and we see the difference. So let me do this. Let's go to the 1 minute. I'm going to just clear everything, and I'm just going to draw here. So we have our higher time frame order block.
Okay.
Then we see, this is now the 4 hour. Then we see price coming into this order block, coming towards this order block. We tap that order block. So now, first, you can enter the trade here.
Okay.
You can enter this, so that will be your risk entry. So I'm just gonna use the right tool. Price comes back down into this higher time frame order block, taps it. So that is where you can look for your first entry, but it will be a risk entry because you'll have a wider stop loss. The order block can maybe be big like that. So that is then where your risk entry is. But this can be foolish as well because you are not sure that price is going to go into your direction, because you can just make a pullback and then continue towards the downsides, and then that's an unnecessary stop loss. So when this happens, I then drop to the lower time frames. So that was the higher time frame. Now we drop to the lower time frame. Now we are maybe on the 5 minute or the 3 minute. For you just starting out, I would say no lower than the 3 minutes. So let's say this is a 3 minute time frame. Now we can see we have tapped that order block. We came down, we tapped that order block. Then we created equal lows maybe. And then we started pushing towards the upside, starting to push towards the upside. In this case, we have now broken structure. We broke structure. We broke this structure. Let's do it like this. And we're creating another set of equal lows. And we have another break of structure. Now we can see the market is moving around, slowing down, and we can see prices slowing down. So that is entry 2, whereas we see price is slowing down much faster, taking more time to slow down. It's not just tapping and going, even though it looks like that on the higher time frame. But we look on the 1 minute, the 3 minute, the 5 minute to see this shift in structure. Then we can see, okay, maybe that is then where we have our order block. So we have equal lows that we have over here, equal lows. We have imbalance left there as well, open space. So if you're not familiar yet with those concepts, make sure to go through all the contents to make sure you understand all those concepts in the course. So then our entry would then be at that order block, expecting price then to reach back into this area and then grab the liquidity below these areas and then move towards the upside. Another great thing to see is if we have something like this. That's ideal because this is an indication that there's a shift in the market structure. The price is now moving towards the upside. That is how we paint the picture. That is how we look for entry type 2.
Okay, correct.
And that is what happened in this scenario. So let's just look at this on a 50-minute point of view. Yes, this is where we are. So just to, I don't want to confuse you, but looking at the 50-minute, where did this, for those that understand it very well, on the 50-minute, there's not a clear candle here that broke the major structure. You see, so this is the big push, and then we had a pullback. So this candle is an order block because it broke structure towards the upside, because we have that area. So we have that area. This push up, broke structure, that's an order block. We did see a reaction there, price pushed up, and then London opened and we broke through it all into this area. In this area, I do not see a convincing 1 hour order block, a 50-minute. Perhaps this one can work. Let's say this is the one. But it didn't break any major structure. That's our major high and major low. This is just minor structure for the move towards the downside. In this case, we also have equal lows. So if you just look at it like this on one time frame, you will get stopped out because you will have maybe your entry there and stop loss just below it, and you will get stopped out multiple times. But the way I explain it now, by going first to the 4 hour and then the 1 hour, we work within our higher time frame areas. That's most important. You have to work within the higher time frame areas. By noting the higher time frame, just gonna make it one color. The higher time frame 4 hour, we came back into it nicely. Going to the 1 hour, we see we have the 1 hour order block there as well. Tapped it to perfection. Once we tapped it, so that is the key actually. Once we tapped it, that is then where you can see you don't have to do anything until price taps this area. As soon as price taps that area, then in this case we had to go to the 1 minute. Now we have to look at the 1 minute and see how price reacts, breaking structure. Now we see, oh, we have this liquidity being generated. This is our most recent high. Okay, I'm not doing anything yet. This is our order block. So I'm not doing anything. I'm not putting in a limit. I'm not putting an entry there until price has broken this area. As soon as price breaks that area, now I can put a limit entry or market execution at this area and see, okay, what's the range? 1.5 pips.
Okay.
At least 2 pips stop loss, no less than 2 pips. Now I can wait for price to come back down, tap into my area, a little bit of drawdown, and then we had the push towards the upside. And the added confluence is just noting how price reacts after it tapped. We see, as I explained just now, return to order block, push up, return, and then ultimately the big push towards the upside. Make sense? Everyone happy?
Yeah, makes sense. So now breaking of the structure is really important when you have the OB, right?
Yes. Very important.
Oh, okay.
But make sure to go through all the course content and then, yes. Okay, let's have a look at, I think you all should know entry number 1 and what entry number 1 looks like. And it was on GU this week. Raise your hands if you know what I'm talking about, which one I'm talking about. You can just do it visually or just say, my hand is raised. I know what you're talking about. Ilya knows. Alex knows, or thinks he knows. Anyone else? Jack thinks so. Great. Paul thinks knows well. Okay. The area I'm referring to. Darius. Guys. This trade. This order block. And this push down. Let's look at it. So it's close to what do you call it? The DW strategy. Very, very simple, nothing major. We had some different views on buy or sell, and some people looked for buys, others looked for sells, and yes. So first of all, let's just reverse and let's just go through this. Okay, so first of all, I identified that we created a high and then price failed to make a higher high and then create a lower high. So first of all, I can see that there's a potential, a shift in the market structure on the 1 hour, and we can potentially see a pullback, creating a lower high and then a continuation towards the downside. I can base this also on the 4 hour time frame by saying we are overextended. There's nothing to the left that we can look at. Price has really pushed up high. So in this case, it will be a retracement trade, a counter trend trade, a pullback trade. And yes, so that's how I base it on the 4 hour. On the 4 hour, I can also just see that 1 hour lower high by the wicks that we created that's lower than the previous one. Jumping back to the 1 hour, I identified that we have this structure break. There is our structure break. Let's just put it down there. So now we have a structure break and we have this order block created. So let's just put the label on it so everyone understands. That is then our 1 hour structure break. Everyone is still with me. Great. Now we expect price to return to this area and then see the sell-off from there. Great. So that is why this is an entry type 1, because it is based off of a lower time frame order block, the 1 hour, and you'll see now this trade came to fruition at New York Open, I think, and we had some sideways moving price action throughout London, which gave me more confidence to take a trade on this one. So that is our 1 hour. Let's now drop to the 50-minute and we see how price returns to that area. Price creates the high, we create, move too fast. Okay. Within this area, we have this candle as well as our 50-minute order block. Let's just mark that out. It's the last candle before the move down that engulfs the first candle. So that is our 50-minute order block. And let's jump to the 5-minute. We can even see that we have this 5-minute order block as well. So now you can see we are stacking the confluences like a flapjack, like a pancake, all stacked. All we need now is the syrup to make it sweet. We have these equal highs on the 5-minute. So we have our equal highs. So we can check, make a check mark. We have imbalance here as well. You can see, for those that know and you've gone through it, you know that we have some imbalance there left as well. And even on the higher time frame, there's imbalance there as well. So we have the imbalance on the 50-minute, on the 5-minute. It's all aligned. Now, there's different ways to skin this cat. First of all, we have this trend line liquidity. So we know that we can potentially grab all of that liquidity just towards the downside. So we have equal highs, we have imbalance, we have order blocks, we have a break in structure, the structure break. It's looking all just too good. And when is this push moving up, happening towards the upside? Exactly at New York Open. So that's timing is perfect. So that's just the cherry on the cake, the cherry on the pancake. You can have an entry like this, stop loss just above the order block, maybe give a bit of grace, a few just a bit below, let's say 5 pip stop loss. I've said this before, I don't like to enter over exactly on the low end of the order block. I like to leave a bit of space, and then lower time frame targets below of Asian session, which will then be, well, where's the Asian session? Something up here. Anyway, we'll talk about that now. So that can be the setup on the 5 minutes. So this will be, as I said, an aggressive entry, because you will not see price coming back down, breaking structure, slowing down, because we don't need to turn the boat around too much. We are already in the right direction. We all are already trending on the 1 hour towards the downside. If we take this into consideration, that would just simply be a lower high before us making a lower low. So that is the premises of this trade, and that's how we are looking at it. So we see price come back up, and tap exactly into our area. So that is your first entry. But now let's say you want confirmation. You want to see price giving you more clearer information. On the 1 minute, let's break it down on the 1 minute. So let's just put this aside. So there we have the high. This could be the liquidity grab. There's our low. Let's see if we break this low and then come back for a retest. So we want to see price come back down, break it, and then pull back into an order block, and then a push towards the downside. So then we see price comes back down, breaks it, marginally, but we have a structure break. We have an order block, 1 minute order block, something like this. Sorry, there's a structure break, clear structure break. I use this one, I think, something like this. So there is the 1 minute order block. There's our entry. Stop loss can be, because it is so tight, and I don't want to sit with a too tight of a stop loss. This is like one, that's too low, at least above 2 pips, and GU can be higher. So I like 3 pips on GU. And that's how I entered. Price came back into it, played around a bit, and then melted towards the downside. So 2 entries, more or less the same risk to reward. So entry 1, aggressive. Well, as Walter also said, it can be seen as not as aggressive because it's a return to a 5 minute order block. This could have been the aggressive entry, but you couldn't have really based it off of anything. So the way we trade, that would be the aggressive, this would be the confirmation entry, and then price just came down and tapped. So take profits. We like taking profits at 5 minute order blocks. There is a clear 5 minute order block. And I think price eventually did reach my take profit. It was like this. I took this trade. I think it was 14R. Eventually we had Asian session, and then yeah, it tapped down. So that was the trade on GU. Now, any questions, Ilya, that I need to answer?
I don't think so. Nothing is coming forward for now.
Okay, so you managed everything there. Yeah, any questions, guys? Anything you need to understand this? Do you understand the differences? I thought to use relevant examples that happened this week, as it's still fresh in everyone's mind, because we spoke on it and all the way in the chats and so on. So any questions from you guys?
No questions from Paul. Johnny's on fire.
Someone call the firefighters.
What was the risk to reward on that?
This one was 14R. Yes, I think I stretched it a bit. I made 16% on this trade. Like this.
Woo.
Yeah, I thought that was one of my biggest trades this year so far. Bastian, can you just draw the Asian range on this one, please? Yes, of course. The Asian range, we have 7 and 3. So initially, I think I remember I spoke about this in the morning analysis as well. I said that we have a trending Asian range pushing towards the upside, and we can potentially see a pullback into this area and then a continuation towards the upside. I think that was the premises, and price didn't even respect it at all, just plummeted through it and break this low. So when it broke this low, we had the structure break on the 1 hour, very clear, then shifted my bias towards thinking, okay, price created these equal lows, lower high, and we can potentially see the rollover towards the downside. And then just looking at the TDI, so let me just get that up. In this case, on the 5 minute, it was clear, I think, yes. So you can see it there happening. There's the TDI, it made the peak. So I know not everyone likes indicators. You don't have to like indicators, but it's a great confirmation. You can see that on the 5 minute, it created the peak, finished in Clark. Then we looked at the 1 minute, and then we could have Then after we had the 5-minute peak, we now know we have more confidence, added confirmation that it was just a manipulation, because it's manipulation because we had a consolidated London session, we had the big push towards the upside in New York session, and we had the peak, all confluences stacking up together, retested that area, and then we had the flush towards the downside. Yes, Bastian, exactly that. Just want to show you on EU, it happened, I still have this marked out. So I had this marked out as well. So just an example of the training agent session with regards to what we spoke about in the first slide. Raise your hand if you think this is trending. It's trending. Obviously, I think everyone can see this is trending towards the downside. We had a bit of a pullback, but this is trending towards the downside. And then at Frankfurt Open, well, this is actually was confusing because it happened before Frankfurt Open. That's why I didn't take it or looked at it. But at Frankfurt Open at 9, I wanted to see a pullback into this order block, this one or that one. But it pulled back all the way into this one. So it could have been something like this. We had structure break, a structure break, pullback. Remember that second slide, I think? I'm just going to quickly show you that second slide, this one. We take this concept into consideration. We had a structure break, a pullback towards that order block, and then it flushed towards the downside. Davino asked, can we talk about the counter trade as once we turn back towards the upside? Yes, that's why I wanted to speak about this one as well. Thank you for reminding me, because that also ties in with this. So that's a good example. Thank you, Davino. So looking at GU, yes, I have something else to say as well about GU. Okay, so now we are trending towards the downside. I took a trade here as well. I think a few of us took this trade and it ended up as a break even. But yeah, so we are pushing towards the downside. And I remember saying in the morning analysis, okay, here we have our latest structure break towards the downside. Where can we identify the order block? I remember I had a question about this as well. So this is the last up candle before the move towards the downside. But this is just ridiculous. We can't use this one. This candle, we don't have a body close after it, covering it. This one doesn't engulf it yet. This one is not engulfing the previous. This candle is not engulfing that candle. This one is engulfing this candle. So this is more optimal. So that is our 1 hour order block. And where is London? There's London Open at 10. So at London Open, I want to see a push up into this area. So this was a unique situation because look at this. GU does this often, so pay attention. We have trend line liquidity and we have equal highs. So there we are, equal highs, and we have the trend line liquidity there as well. So just before market opens, after Frankfurt Open, it pushes down, grabs all the liquidity low here, and then pushes towards the upside. So here I marked out this order block. This will be then 15 minutes, 15 order block. And because I have a higher risk appetite, I would do something like this. And then, so if you are conservative and you want just 5R, which is not bad, who wouldn't want 5R in the morning? That would be the setup. Came back up. Yeah, tapped it. Alex took this trade as well, didn't you, Alex? I think so. Oh, yes, it tapped this one order block. Sorry, I'm confusing you now. This one. and then it pushed towards the downside. No, I'm confusing myself now. This was the push because the trend line is there. Yes, there it is. It did tap into it. I was right. So the entry there, stop loss above at London Open, and it pushed down. So if you had your stop loss just above, but again, held it for longer, and then it came back down up. So this all happened, and you got break even or whatever. Now you just need to readjust your vision. So exactly what Divino now spoke about in the trade that he shared. So we have this impulse towards the upside. This is New York Open, just started, or just before New York Open, we had this big push towards the upside, and we had this structure break and this structure break. So multiple breaks of structure. So we have this big push towards the upside, breaking structure. Then we have our order block there as well. So, and then you have your entry there, like this. Maybe take that week into consideration. And this is that example that I showed you in this slide, where we have a structure break, a pullback, and that's an aggressive entry. Why is that an aggressive entry? Because it's just the first tap into that order block, because you did not know the price is going to reverse from this area. If you paid attention and if you looked for this finer details, we could see that we created a low, we created a high low, so we had a shift in direction, shift in market structure, and then we had this order block, price broke all the structure. We had empty space as well. So if we use our checkbox, we had shift structure break, empty space, but we did not have equal highs or equal lows, so that's why it's more aggressive. And maybe on the 1 minute there would be something. Not really.
David, I think you could find some order block on the 5 minutes. If
the 5 minutes. Yes, that is even clearer. Perfect. So this is another example where the 5 minute makes more sense, or makes better sense than the 15 minutes. Dropping to the 5 minute, then we can see a clearer order block, big push towards the upside, breaking structure, and we see how price returns to it. And price creates the shift in the market structure. We have this high low being created. This is also a very good setup. But you would often find, well, that's for me, when I'm so fixated on London Open, looking for a trade in London Open, and I maybe get a win or a break even or a loss, I'm so fixated on price going down that when this happens, you have to be quick to shift your mind and readjust your vision. If you looked for just sells all along. So that's something like some part of the psychology, knowing that you have to really trade what you see, and that comes with experience and practice. I'm not there yet all the way. I still get stuck into a bias and just think sells, and then when a beautiful opportunity like this presents itself, yes, then you would miss it. And this is again more of an entry type 1 scenario where you don't get that big slowdown, but nonetheless it's a great trade opportunity.
it could be also because it's Friday, the price just pushed up so furiously to the upside. I don't know. Because yes, usually we should like get a new test to that 5 minutes OB at least.
No, exactly, but, definitely.
Yeah.
Is it better to target take profit area on the next order block or use fib extensions? I don't use fib extensions. In this case, if this is a trade that I took, I would look first of all at the Asian highs. So the Asian highs is, well, is this area, so that is not really where I would look for a take profit in this case. Would like look at the high time frame order block. So there is a order block that we break structure towards the downside. So in this area is where I would then take profit. Yes, but then again on a Friday you do not really expect this massive reversal on the Friday. So But with regards to take profit, I would like to take profit at the order blocks. Can't wait to catch these trades. Yes, Arius, you will definitely. Yes, there was a 1 hour order block down there as well. Thanks, Johnny. Cheers. Beautiful.
Dev, I just want to ask you another question about regarding to this trade. If you go back to the 1 hour chart and you look to the left, you see those comprised price action more to the left. Yeah, those, you know,
Yes.
Is this a kind of indication for us where maybe the market will slow down instead of looking for shorts, like the example you took you took before this trade? Maybe the price action was so compressed because of that hefty price action. The price would either slow down or either, you know, break up to the upside again.
Yes.
Because there's no specific good candle of OB there. That's
Exactly. So that's why I was also confused or not seeing. So I didn't identify any order blocks because look at all those wicks coming back down into it. So in my head, it's already mitigated. So we are either gonna just break through it. So this is the area that I wanted it to go to. You see, this is a much clearer 1 hour order block because it's a nice clear candle. We have nice momentum up, breaking the structural high. This didn't, it was just so messy, so compressed. So that's why I didn't foresee it reacting from this area. I was looking for a deeper pullback because even if you look on the 4 hour, this is our range. That's the low, that's the high. So I was definitely looking for this order block for reaction because this didn't even tap the 50%. So this really came, I won't say a shock, but not expected for me. So yes, you can say that there's a 1 hour order block. And I do think that price did react off of this compression, like you said now, but just it doesn't fit my plan really. Because off the bat, just to look for a trade in this area, I would rather have looked for something in this area, because even we have these semi-equal lows. So it fits, this area fits more what I'm looking for in a trade. But if price then reacted so aggressively from this area, then we could have then adjusted your vision and then looked for the buy like you did in that area, because everything was in there, all the ingredients was there. Yes, exactly. So we did not expect it because the order block was already mitigated. And it could be news affected as well. So nothing is for certain, or nothing is exactly set in stone with this. But you can see the power of knowing the formula of how price moves, knowing the formula, knowing the I'm not going to say the algorithm, that would be too presumptuous, but knowing how price moves and how it moves from one area to another area, you could have then identified this and taken the trade. But it's easy now to say in hindsight, but it takes practice and experience and chart time to see it in real time. Now, guys, we're almost busy for 2 hours. I think we should start to wrap it up. And I think we'll definitely have a third session, Ilya, if you agree with me.
Definitely, yes.
And then we'll cover some more things. Then I think I'll do an extra video for the trading view setup. I'll do it during the week somewhere.
Yeah.
So we don't waste time on it in the session. Yes. So if you have any other questions, write them to us, and we'll make a list of them.
Sadiq wanted to say something, but
yeah, but I want to move to my television, but like I want to stop on that. Okay, yeah. Please, I'm very used to MT4, so I don't really know anything about trading view at all. So
Yes.
I need maybe a short video on how to set up my trading view, on how to make my template, stuff like that. You understand? So
yes, that's what I just said. Now we're going to make a nice template, a nice video to make a nice template. So it will be out this week, and you can just take I'll put a notification in the chat that it's on the website in the course material. So just look out for that. Can the strategy work outside of London and New York session? It can, but volume is lower in Asian session, and I would not advise it. I think we should prefer staying within those sessions. Do your markups and everything, and you can even set your limit orders if you aren't able to trade those sessions. Yeah, so I hope you guys enjoyed it so far, and I hope you guys understand better, and I hope this will motivate you to go and backtest, test the trades, test the setups, go on your own chart, and all the GU trades and the AU trade, go on your own chart and mark it out exactly the way I did. Once the score recording is up and you want to rewatch it, and then go onto your own chart and see if you can identify it without looking at the video, and just really make sure you understand these concepts and can apply them. So that's all from my side. I hope you all enjoyed it, and yeah, thank you very much.
All right.
Thank you a lot, guys. It was super interesting, actually. Yeah.
Amazing,
Looking forward
bro.
to find these setups in the market and just study as much as we can.
Exactly. Exactly.
Yes.
And we do provide this every single day. The vet breaks down trades every day, every morning. I do on my site as well, just show some setups. So yeah, if you watch carefully, a lot of examples.
I love actually seeing the beginning of the manipulation system and where we are now and where we are going, you know. It's crazy how fast it's developing, or how fast are you developing. Yeah.
Exactly.
It's amazing.
All right,
Great,
everyone. Thank you so much for staying up until now. Again, I think David did an amazing job. And again, if you have any further questions, any little details, something that you don't understand, something that is bothering you, the chat is always open. Either DMs, but I would advise you all to just publish it in the chat in the questions so everyone can see, and then everyone can get the answer as well. And then on the third session, we're going to have a look at some backtesting maybe, and answer those further questions, Q&A. And yeah, let's get started. Tomorrow's Monday, so possibly we're not going to be looking for trades too much. But then from Tuesday, we strike.
Absolutely.
Are you planning on doing the third session on the next Saturday? Sunday?
Yeah, I think it's pretty good for everyone because we have a lot of members joining in. So I think that's the best time to host the boot camps. Yes.
Yeah. Super.
Yeah.
Perfect. Thank you.
All right, guys. Let's wrap it up then.
Okay. Have a nice day, evening. Bye.
You guys, you too.
Bye for now.
Bye, guys.
Bye, Federico. All right.